Good morning, everybody. Welcome to the Locking Your Success weekly trade and market update for April 28th, 2014. Before we get going, we would just like to remind you that this presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the trades in the presentation are hypothetical computer-simulated trades, as well as the results, and they are believed to be as accurately represented as possible. However, we cannot guarantee that we would have got the same execution had we done them live. Also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. If you're watching this on YouTube or some other venue, come on over to our website at lockingyoursuccess.com. Check out our programs, the M3 Bearish Butterfly and ROCK, as well as a group coaching, one-on-one coaching, trading triangle program. And if you're interested in the M21 program, we do not have that up on the website yet because we're still in pre-launch mode. So come on over to, just give me a call, just contact me at lockingyoursuccess.com. I have my email address there and a contact button, and we can talk about that. Or if you're interested in just going in and directly purchasing it, the purchase link is listed here. Also, join our mailing list, get the free report, 7 Secrets to Becoming a Successful Trader, and stay tuned for our upcoming programs. All right, let's take a look at the markets and how things have been going. So if we come over to the SPX, last week we were talking about that the SPX was probably going to come up to its resistance level up here at the 1885 level, and possibly as high as 1900, but more likely 1885 level, and probably turn over and back off. That's pretty much exactly what happened here. It's pushing into more of a sideways movement. But we're saying when that happened that it would probably drag the Russell up to at least 1150, maybe 1160, backside of this trend line, which is pretty much what ended up happening, and then we backed off from there. So that being the case, let's take a look at the other indices and see what they did. If we come over to the Dow, we pretty much had the same thing. We came up into our resistance area, we turned back over, and on the NASDAQ, we came up to the backside of this trend line, and again, we had a rollover. All right, so that being said, what we have here is we still have the indices. They're giving us mixed signals. We have the NASDAQ kind of trending downward, and it looks a little bit bearish. We have the Dow, which is still in this strong ascending triangle pattern, which typically is a bullish pattern and means we're going to break higher. We have the Russell that looks the most bearish of all the indices, and we have the SPX, which is kind of neutral bullish. We're just kind of consolidating up near the highs here. So that being the case, we have what we call divergences in the indices, and when we get that, we're typically going to have sideways movement because the traders really don't know what to do. And sometimes we'll get violent moves in this range, but as long as the moves, if we're looking at the Russell, for example, as long as the moves stay between this 1075 and for now the 1160, 1165 area, they don't really mean anything. So, what I'm thinking going forward until something changes is that we're going to continue to kind of randomly go up and down in this range, which is a fairly wide sideways range from 1075 to 1165, but that's what the chart patterns are telling us, and that's what I would expect going forward. Now, what's going to change my mind on that is I'm watching the SPX, I'm watching the Dow. If we get both of those, I'm not meaning one of those peeking their head above a resistance area. I'm talking about both of them closing decisively over their resistance areas. So on a Dow, that would mean over the high here that we have, which would be 16,631. And for the SPX, we're looking at a number over this high, which is going to be around the 1900 area. And if we get both of those indices over there, then I'm concerned that the Russell's going to drag drastically higher. Or on the flip side of that, we're looking for the Russell to break down under this 1075 area decisively, and at the same time the NASDAQ coming down to around 3,400 or breaking the 3,400 area. If both of those happen, then it's going to drag the whole market down. It's going to be kind of nasty. So another thing I'm looking at too is I'm looking at how high the NASDAQ is off of its bottom. And if this does want to take a move down to here, you might see the Russell break slightly lower than expected. And by lower, I mean it may come down to our next support level, which is kind of a dirty level, but is somewhere down under 1075. And of course, we have our weekly range. That's possible. But like I said, the Russell actually still has quite a ways to fall too. So I'm just going to watch the timing of those two moves in the two indices, as well as the timing of the SPX and the Dow coming into this trend line, and the Dow, the SPX coming into about the 1810 area. And if the timing is correct, then everything's fine. But if the timing's off, we may push a little bit lower than normal. But what I'm thinking, like I said, is that we continue in this sideways range for the foreseeable future. All right, and that's pretty much what I'm seeing in the indices. As far as our trades, we had the Bearish Butterfly, which was closed. I actually closed this Friday, and that was strictly according to guidelines. So the Bearish Butterfly as of Monday morning was sitting in a position like this. It was up about 61.90. Delta's minus 87, and everything was looking good. We had a bounce. If we look at the analyzed graph, the market did come all the way up to, well, what did it come up to? I don't even know. Let's take a look. It's like we popped all the way up to a high of 1157. And when we did that, we did not hit any add points. That's up into here, about this area here. No add points were hit. We didn't have any delta theta problems, and we didn't have any maximum delta issues. It started to get a little bit close towards the end of the day on Tuesday, but never hit any of those numbers. And of course, by the end of the week, we backed off. Well, if we take a look at Friday before we close this thing, we're up around the 20% return area. Now, if you remember, the guidelines tell us that we exit at 10% profit or more, 21 days to expiration, and we're certainly well over that. So this trade was closed at the end of the day for a profit of $9,690. So not a super month, but a good month for the Bearish Butterfly, and that worked out quite well. So if we look at, let me just take a look at the results so far for the year for the Bearish Butterfly. We are closed this one at 19.4% on our planned capital, and that brings us to 63.1% for the year. So we're doing fairly well there. You know, one of the things I really love about this position, though, the Bearish Butterfly in general, is that we did this $9,600, $9,700 gain, and we had a maximum amount of capital in the trade of under $10,000. The capital level in this trade never went over 10,000, so that's almost 100% return on your capital at risk. So that makes this a really, really nice trade that I feel good about. So that is the Bearish Butterfly for May. That's it for the month. The other positions we have on is we have our May M3, which did get an adjustment on Tuesday. So if we go back to Monday, here is what we had. We had our quote-unquote butterfly would have been with the shorts at 1090. We had a 5-point vertical in here, and we're up at the long strikes. So this is what our position looked like on Monday. By the time we got to Tuesday afternoon, we had a fairly big up day. We're well past 10 points past our long strike. We're all the way up almost to 1160. So by the I adjusted this a little bit earlier in the day than the end of the day. I just had something to do. So we came in here at, let me drag the T-log over here. We came in here at little after 2 o'clock, right? And adjusted, or basically did rolled the butterfly up to 1110, and then moved our verticals. So actually, did I have an adjustment on Monday as well? Yeah, actually, I had a small adjustment on Monday. So by the end of the day, Monday, I did a 5-point vertical. We did a 1090, 1100. If you noticed, we had 15 shorts when I first showed this at 1090. Now we have 10 at 1090 and 5 at 1110, which we didn't have before. So that got a minor adjustment on Monday with the up move. And then on Tuesday, we blew more than 10 points past the long strike, pretty much per guidelines. We just took this, and you can see that we rolled our 1090s. Essentially rolled all these options up 20 points. We rolled what would be the butterfly position up to 1110, and we rolled the 5 shorts to 1120 and 1130. Put us at minus 48 delta, which is about perfect, and we had a gain of 1,300 at that point. And this is what our position looked like here. And we still have a pretty flat T+0 line. We have our downside protection. Everything looks nice. And that was it for the week. So if you bring that to the end of the week, on Friday, we're up a slightly more money. We're sitting at positive 46 delta, which is within our positive 100 delta guidelines, and we're well above our short strikes. So this is pretty much a perfect position here. Nice looking M3. We do have a little bit of downside risk if the market comes down hard. Realistically, if the market comes down 5 or 6 points, this will be getting rolled back to where it was before. So that would be considered a whipsaw. And that's it for the M3 website trade. The next thing we would be looking at would be our ROCK position. Our May ROCK got some adjustments as well. So we'll come back to Monday afternoon, show you what that looked like. I don't think I did anything Monday on this trade. Let me see to be sure. Actually, I did. So Monday we did almost the same thing. We did 5, 1090, 1110 verticals, and we did that towards the end of the day. So if I back this off a little bit, this is essentially the same, very similar to the position we had on the M3 trade, except I adjusted this a little bit different later. Oh, I'm sorry. Let me go to the ROCK trade. There we go. This was a very similar trade to the M3 trade, except I was at slightly higher strikes. I was at the 1100. That's what I was trying to say. So did we adjust this on Monday? No, we did nothing on Monday here. So no problems with this because we're 10 points higher. We go to the end of the day Tuesday. We did make an adjustment Tuesday, and we simply rolled 5 of these 1110s to 1120. You can see that here in the T-log. Yeah, I know. Thanks, Vincent. I found the right account. I have the May ROCK trade now, so thank you. Okay, so here we are, May ROCK trade. That was the only adjustment for the week. This is what we look like at the top of the market, which we are just barely, or I think when we closed, yeah, we're just barely under 10 points over our long strike. So according to M3 guidelines, we wouldn't have rolled it. According to ROCK guidelines, a lot of times I'll let this go a little further than that because I'm not so concerned with a drawdown on a ROCK trade because I know we're going to make it back later. But anyway, regardless, we were not at any adjustment points here. We're negative vega, positive theta. We are minus 40 delta. And, of course, by Friday, let's pull back. We're not up as quite as much money because we weren't in the trade as long. By Friday, we pull back and slightly positive delta. Everything is looking A-okay. And let's see, what else did we have on? So that is the ROCK trade for May. Going forward, like I said, it's basically the same thing as the M3. We hit positive 100 delta where we rolling this back. We get past our long strikes here. We'll be, we'll be taking action, or if we hit our delta guidelines or anything like that. And that's all we have on for May. So let's take a look at the June V Condor, which is the only other trade that was open last week. So from here, Taking a look at the V condor, we had no adjustments. This is what our position currently looks like. We're right in the middle of the V. We are still far enough from expiration that we remain positive theta here. If we sit here for too much longer, then we'll be raising the V up, but everything looks fine here. I didn't show the analyzed graph for the May V condor. I apologize for that. May V condor right now looks like this. We did buy back some of these shorts earlier in the month when the market was down a little further. This V is going to have to start coming out relatively quickly if the market bounces because we're close to expiration. We're going to be getting negative theta here. So we will start rising this probably this week, assuming the market does what we expect it to do. If it stays down in this range, I'll leave it alone. But certainly if we get any kind of a decent bounce, we'll be raising that up. And last but not least is I did enter a June bearish butterfly. So not the best entry on Friday because we just come down to a 20-point down day. The reality is, what would be a good day? Would have been a good day to enter this if we're doing this a little bit or discretionary. If we're a bit discretionary with our bearish butterfly, anytime when we're up past or up near this level here of about 1150 would have been a really good time to enter it. I'm still not concerned about entering it here at the 1120 area because if I was doing this from a discretionary standpoint, because I'm thinking that the market is in a relatively sideways range. So that being the case, I do want the market to bounce. I want to get scaled in a little bit more so that I can hit my 30% profit target a little bit easier. In which case, I do like this entry. I don't necessarily like entering on a down day. I would have rather entered on an up day. I would rather enter today if the market continues to. It looks like the futures are positive. If the futures are positive today and we get a good bounce today, would rather enter today. However, there's nothing wrong with the entry. I like it, and we'll see how it works out. Of course, like I said, if we were still in an obvious bullish market like we were most of 2013, I wouldn't like this entry. But like I said, market conditions have changed, and I do like it. All right, so that is. Let's just take a look at the analyzed graph on that. Here is what the position looks like here. This is what we have for the T-log. We have entered the 1100 shorts. The market was at about 1123, so we're about 23, 24 points behind the market. And this is what the position looks like here. We're looking to scale in if we get over 1140, and we'll see how that works out. All right. So my first question I have is, what is the lower M3 positive delta number range? All right, so I'm assuming you're just asking what's my maximum positive delta on the M3, and that's positive 100. In downtrending markets, sometimes I will be a little bit faster than that and do something at minus 50, especially if positive 50, especially if we're close at expiration. But as a general guideline, it's positive 100. And Vincent is asking no June M3. There will be a June M3. I've been doing the M3s one at a time for the sample trades. We could do them at 56 days, but like I said, I've just been doing them as pretty much as the trade before closes. I've been just going into the next one. So most of the M3s have been in the 30 to 45 day range for the last, year. So we've just been doing that. And if everybody would like to see a June M3 from 56 days, then we can certainly do that. We can add one of those in here. Like I said, I've just been doing month to month, so we have no overlap in capital. And let's see, any other questions? So that's all I have for questions. Do we have anything else? If today is a good bounce day, would it be a good entry for an M3? That depends on what your volatility levels and the strike prices you're entering at. So if you're entering at, if it's a really strong day, then yes. If we have a really, really strong day today, say we're up 20 points plus, then that would be a good day for that. If we're If we have a mild bounce, 15 points, it'd be okay. It'd be a decent so-so day. If we get kind of no bounce and we're kind of really stagnant, then it's less less desirable. One of the things you can do is you can check the pricing of the butterflies that you would have entered on an M3 on Friday and maybe on Thursday to get an idea of how much money that they were going for and kind of estimate what they should be going for today. If they're abnormally high, then it wouldn't be a good day. But if the prices stay stable or if they drop out a little bit, then yeah, it would be a really good day. All right. So another question is for bearish butterflies on entry, if you can't have a good delta theta ratio. So if I'm doing, and this is from someone I know who is more advanced, so it's going to depend on how you're doing the bearish butterfly. If you're doing a straight bearish butterfly guidelines trade, and what is our delta theta ratio, by the way? All right, it's perfect. It's going to be perfectly fine now because the volatility is high. But if I come in here and I'm back trading and I'm back in most of 2013, when you get crazy delta skews and stuff, when you enter the bearish butterfly, a lot of times you'll have a delta theta ratio problem. You'll have a theta number of somewhere around 70 or 60, and you have a delta of like minus 150, and that's a violation of guidelines. So what we would do is we simply roll it closer to the market. So instead of starting 20, 25 points below the market, you'd be starting closer to at the money, and that would be from a straight bearish butterfly standpoint. So if we're doing an M21 trade, which we don't really talk about on the updates a whole lot, if we're doing something like that and we want to enter a bearish butterfly and it's against delta theta rules, I'm only concerned that it's not going to max loss out or produce a maximum loss when the market does what I think it's going to do. So a lot of times I will do a bearish butterfly and ignore the delta theta guidelines if I'm doing if I have some sort of a directional bias going on. But if I'm doing it by guidelines, straight guidelines, and the delta theta guidelines are violated, in other words, if I entered this 1100 and I had it violated delta theta guidelines, I'd try 1110s and see what my delta theta ratios were. And if they were still bad, I'd go right at the money at 1120. Right, yeah. So on 20 below the money. Okay, so do I add a vertical to correct that or go one strike closer to the money? Right, like I said, I go one strike closer to the money. So if I have a delta theta ratio problem, if I'm doing a straight bearish butterfly by the guidelines, I'm going to go for one strike closer to the money. If I still have a problem, I'll go another strike closer to the money. If you're at the money and you still have the problem, I would say don't bother entering the market because the conditions are so bad to trade that type of trade at that point. It's just not worth it. Which rarely ever happens. I've never actually seen that happen, but I suppose anything is possible. Okay, in a live position as a butterfly order, in live trades, how do I enter the position as a butterfly order or two verticals for a bearish butterfly and M3 trades? I enter them as butterfly trades, and I enter them when the market is going up, and usually when the market's going up very quickly. So I'll start, like if I'm going to do a bearish butterfly, I will start, if I know the conditions are good for that, I'll start like 60, 65 days before expiration sometimes. Start looking for an up cycle and a strong up day in the up cycle. So this month here, my bearish butterfly live would have been entered on this, I would have liked to enter it on this Tuesday, on the 22nd, right? And I would have timed that with the SPX coming into its resistance level on Tuesday. So that was a perfect entry day for that. Why? Because the butterflies are cheap, the market's screaming up, and the butterflies are really cheap. It's a good day to enter butterflies in general. Okay. So here's the next question. Is a strong down day typically not a good day to put on M3? It's perfectly fine. I mean, if you're asking from, and I'm saying this, I'm answering this question from an in general perspective. In general, is a strong down day okay to put on an M3? And the answer is, yeah, it's fine. There's not a problem with that. A lot of times the volatility levels are down. You have that call in there. You see, with the M3, you always have a call balancing off your butterflies. So you're going to pay a little bit more for the butterflies usually. It depends on what the volatility does, but I mean, usually you're going to pay a little bit more. And the thing is, you're also getting the call for a lot less. So when you get that strong bounce, especially if you have to put verticals in there, when you get the reversal bounce, it's the call gains so much value. It doesn't really matter so much when you enter an M3. You can usually enter them any day. The more important factor is when you get more advanced is to go in and price that position for the last week. In other words, you take that position, you put it on BackTrader, and you price it for the last week and see at this price level what should it be worth. And you can kind of get an idea if it's overpriced or not for that particular day. But that's more advanced stuff. Right. Okay. Because someone says because I see fills are not good in the Russell. Actually, fills have been fine in the Russell if you've been patient, and if you're watching the techniques that we teach in the M21 trade in the M21 course. If you're watching market pressure, if you're watching your synthetics, fills have been fine. The issue that you're probably having is, especially in the last 6 months, the prices in the Russell have been fluctuating all over the place, and you're going to notice very wide fluctuations in your position values, very wide fluctuations in your profit and loss. And if you take a look at a butterfly, for example, the market might not be moving, but the price might be moving $2. So there's a certain set of techniques you need to do to determine what the actual mid price is. And once you do that, if you watch which way the market's going and realize that your position is going to gain or lose value with certain market moves, you can time your entry in pretty good. I mean, not that you have to do that. You don't have to do that. But if you're looking to maximize your profits, then you can do that. But the fills have actually been fine. Okay, so Vincent's saying maximum delta is minus 250 all the time, right? So I'm assuming, Vincent, that you are saying that, or asking maximum minus 250 on a bearish butterfly. And that would not be all the time. That would be maximum delta guidelines would be minus 250 if you were 1/3 entered and you had a 10 butterflies on. So if you had if you were 1/3 entered and you had 1 butterfly on, it would only be minus 25, just doing the math as a ratio. And if you have 2 butterflies on, and we allow it to go to minus 500 and 3 minus 750, assuming the delta theta ratio guidelines are okay, which is very high. That's a very high delta trade, but it stops you from getting chopped back and forth in a volatile market, and that's my guidelines. All right, and I believe that's all. So great session, everybody. Thank you for the awesome questions and for attending. Next month is May, and I'm looking forward to see what happens with the May trades and coming into June. So have a great week, everybody. Thank you, and bye.